Do you think this is a scam rally or a rally for ants?
Well, gun to my head, I think that we're probably not going much lower. I don't think we're going to get down to 50K again. I think it's likely to be a sort of a very slow grind up and down for months. But I would be surprised if we went back down to 50K. Now, I've got a few points here for why I think that, and I'll go through them. We are live. Welcome back to another episode of Token Narratives. I'm Graham Stone, joined as usual by Alex Richardson. David Sensel is not here this week. He's doing some stories. He's doing some coverage of some very interesting stories in Texas around Bitcoin mining, and he's getting prepped for Bitcoin Las Vegas. Bitcoin.com News is going to be on the ground there, interviewing the movers and shakers at the biggest Bitcoin conference in the world. Excited to see our content come out of that. Alex, how are you today, sir?
I'm doing excellent, sir. How are you?
Great. Excited to talk a little Bitcoin this week. Bitcoin's been up about 16, I think, on the month. Kind of a pretty steady grind over the last several weeks. Bitcoin has performed reasonably well given the, I guess, geopolitical uncertainty. Although not as well as TradFi. We have the S&P, the Russell, the NASDAQ. I don't know what the other ones they are named, but they're all up bigly and at all-time highs. So even equities like Coinbase, Coin and Strategy catching a bid. So the market's all kind of ripping right now. On the geopolitical front, we have the extension of the ceasefire in the Middle East, but Iran warning that it will play new cards on the battlefield. Then in the EU, that hellscape that you occupy, Alex, there's food warnings being issued by the ECB chief, Christine Lagarde. Possible food rationing due to fertilizer disruptions.
Oh, that's just great.
Yeah, in the US, people might have to pay a little bit higher gas prices, pay a bit more at the pump. That's about all it's coming down to in the US right now, at least. Meanwhile, on the monetary policy front, I guess you could call it, the Fed chair appointee, Kevin Warsh, has said that there's only a, quote, short window to bring inflation back down. And he has also denounced quantitative easing. Quantitative easing.
Just say QE. Come on.
Yes, QE, saying it was reverse Robin Hood, which I guess he's implying there that lower rates and quantitative easing might not be guaranteed, as many had long believed that, that Kevin Warsh is a Trump's guy, and Trump's long been saying, hey, lower the rates, too slow, Powell. But
Trump's been talking about lowering rates for like 3 years, constantly hammering on J-Pow for allegedly keeping rates too high, saying people can't afford to buy houses and whatever. And now that Trump's finally got his guy in, the first thing Warsh does is he starts talking about getting inflation down and how money printing is evil, QE is stealing from the poor, giving it to the rich. And so he's like implying that he's about to do the exact opposite of what Trump has always wanted. And then even a couple of days ago, Trump said he's been in favor of raising rates to stop inflation, which we all know is comedy. That's like an inversion of the truth. And I honestly think that's like a big fake out so that it's not too obvious what they're about to do. Because if they just came out and they said, we're about to keep rates low and inflate away the debt, then that wouldn't really have the desired effect because everyone would just front run it and asset prices would get away from them. So I think it'll be really funny to revisit this in a couple of years and see whether or not he actually follows through on this. I really doubt it. I think they just need to keep everyone guessing. Yeah. Anyway, I thought that was funny because they're just like openly psychologically abusing us all like they're a really mean stepdad or something. Like anyone who takes a quick... Go ahead.
You're saying they're going to do the opposite of what they're saying right now.
Yeah, I mean, isn't that the only thing they ever do for our entire lifetimes? Everything's
a fake out. I think you've got a point there. Yeah, that's good. It's good. I like that. All right, let's talk about Bitcoin a little bit more. Alex, you've put some technical analysis into the chat, into our the docket, something about an Ichimoku cloud and a macro triangle. Can you explain these? Meanwhile, I'll bring them up on the screen share.
You never heard of a macro triangle? You some kind of noob? Yeah, so basically, Rect Capital, I think he's got a really good track record. He does a sort of long-term monthly and weekly TA on Bitcoin. I think that's the safest, sort of like highest ROI TA that anyone should do on Bitcoin, is just sort of the long-term weekly, monthly candles. And of course, this is astrology. Don't take it too seriously, but he basically says that in every bear market, after the main support collides with the downward resistance, that creates a triangle. And once you go below that triangle at the very tip, it rarely recovers until many months later. So this happened, of course, in 2018, 2022, and he's sort of arguing that we're doing this again, and it's implying that there's going to be 4 or 5, maybe 6 months left of bear market. That leads us into late this year, or early 2027.
Okay, that's interesting. I'm looking at the chart right here, and you could just as easily argue that we already did drop below that macro triangle. We've had we're in our third candle here on this chart, at least. I guess these are monthly.
Yeah.
Below the line. And then if you look back in 2018, there was 1, 2, 3, 4, 5. 2022, 1, 2, 3, 4, 5, 6, 7, 8, all sort of below that line. So it's yeah, okay. It seems like either way, it doesn't look like we're gonna go down like another 50% here.
Yeah, no, I don't think 50% is a realistic target, but it's more of like a timing thing.
Yeah.
Like if you want to be capital efficient, maybe not, maybe don't jump in right now is sort of the takeaway, I guess, from that chart.
Okay. All right. Tell me about the Mr. Ichimoku.
Yeah, so the Ichimoku, what's the full name? Ichimoku Kinko Hayu? I don't know, just call it the Ichimoku cloud. It was originally created by, I believe, Japanese rice farmers a long time ago, to basically do TA and risk assessments on the price of their crops. And without getting into all the jargon, basically the cloud, which is the red and green part here, that can be sort of viewed as like your baseline or your moving average. So if price is consistently trading below it, then you can call it a bear trend. And if it's above, then you can call it a bullish trend. And what North Star charts, that's a really good follow in my opinion. What he's saying is that the bull market is not going to start until price is back above the Ichimoku cloud. And just based on time, that looks like we've got quite a few more months, maybe early 2027. So again, timing.
Okay. And looking at this chart, we've got there's sort of predictions for what's going to happen in the rest of this year. And I guess we're here in the red circle right now. And or are we over here now?
Yeah, no, we're in that little channel, and he's suggesting that we've hit resistance, and we're going to break down a little bit further before we go higher.
Down this area, 50K.
Yeah.
I see. Okay, interesting.
Allegedly.
Okay.
But yeah, I mean, that's sort of where I'm at. I agree with that analysis. I don't know about you. Do you think this is a scam rally or a rally for ants?
Well, gun to my head, I think that we're probably not going much lower. I don't think we're going to get down to 50K again. I think it's likely to be a sort of a very slow grind up and down for months. So, but I would be surprised if we went back down to 50K. Now, I've got a few points here for why I think that, and I'll go through them. All right. First of all, like, it is true that if this were to be, if we've already bottomed, we've already hit the worst of the bear market, that this would be the least painful bear market in Bitcoin's history. Only a 50% drawdown from the peak to the lowest point, which I guess so like a 120 to 60K, right? Other bear markets were more like 70, 80% drawdowns, right? So if that 50% down to 50, 60K see whatever K it was the low, then that would make this the least painful bear market in Bitcoin's history. But then again, it was also the least parabolic bull market, wasn't it?
Yeah, which sort of that plays into the diminishing returns theory as well.
Yes. Okay. Now, on top of that, we've got a few different dynamics here now that might suggest this time is different. Famous last words. But obviously, there's Michael Saylor, the backstopping the market, right? So in no previous bear market have we had such a strong structural bidder. And with his financial wizardry, I think he's figured out a way to make that especially strong here in recent months, thanks to STRC, stretch, yes, which has so far raised, now this is from the machine, I haven't triple checked this, but I think between $15 and $20 billion for Bitcoin purchases. STRC launched in July. They did an initial raise of around $2.5 billion. And since then, they've been doing these at the market offerings, I think they're called, of this equity that pays dividends. It's not backed officially by Bitcoin collateral. You buy it, it's supposed to trade at $100 per STRC per stock. And if it goes below $100, they pump the yield on it. It started at 9, it's now up to 11.5%. If it goes above $100, if it trades above $100, they cut the yield back. That's sort of the mechanism for trying to keep it stable. Yeah, through issuing this, they have raised between $15 and $20 billion in Bitcoin, in money to purchase Bitcoin with. Strategy has purchased about $11 billion in Bitcoin since the start of the year. By comparison, they bought $22 billion in Bitcoin in 2025. We're only in late April here, early Q2, and we're already at half the amount that was purchased in all of 2025. And 2025 had a lot of Bitcoin purchases by Strategy. They're ramping it up. In the most recent purchase, the week between April 13th and 19th, they bought 34,000 BTC, and that was fully funded by this STRC at the market sale mechanism. All right, so that's point number one. Michael Saylor is here, buyer of last resort, scooping up all the coins. Anything to add to this before I move on to my next point in my presentation here, Alex?
No, I agree that structural bidders going crazy or more crazy compared to last cycle could be the thing that disproves and negates male astrology. We're all here like looking at squiggly lines, and then meanwhile these guys are just scooping up coins like a madman. And I don't know if that's pretty unprecedented. So yeah, I know, I agree that that's like the bullish case.
Okay, I've got more.
Yeah, go
ahead. Stock indices that are at all-time highs. It's a simple thing. Bitcoin should catch up. Bitcoin is not anywhere near its all-time high, yet stock indices are. Okay, so that's another point. And in a similar vein, you have gold. Gold is near $5,000. Bitcoin, gold to Bitcoin ratio is historically low. So here again, Bitcoin should catch up to gold. Then there are narrative tailwinds, I guess you could call them, around the most recent one, Bitcoin sort of being used in times of increasing geopolitical uncertainty. And then there's one more thing, which I've been following, trying to understand it. And I think I saw somewhere, Alex, that you've also been following Jordy Visser. Did I see you write in a chat somewhere, my man, Jordy Visser? Was that being ironic, or?
I was being ironic because David was making fun of me for listening to him too much. And he kept referring to Visser as my boy, so I had to embrace the insults.
Okay,
so yeah, he's my boy.
So the implication there, I think, is that David doesn't put too much stock into the words of Jordy Visser, who, to be fair, does seem kind of like a perma bull on Bitcoin. But yeah. He's like Pompliano's best friend these days. He's on every Pomp episode. So
which is fine. I like Pomp.
It's fine, but
no hate.
It's a data point. I like Pompliano.
Yeah, me too.
Yeah. All right. So anyway, let me see if I can synthesize his argument here. Jordy, so this is another point for why this time might be different, why we may already be in the early innings of a bull market. So I think Jordy Visser's argument is that, okay, AI is disrupting the cash flows that have historically underpinned most software linked equities. So owning assets in the equities markets that are valued on discounted cash flows suddenly kind of means owning a bet on business models that AI can destroy. On the other hand, Bitcoin, which has no cash flows to disrupt, sort of sidesteps that risk. Now, what does Bitcoin have to do with software as a service equities? For much of recent history, I think Bitcoin has been very tightly correlated with that segment of the market. Bitcoin is a software tech play. Now, that correlation, I think Visser argues, could be breaking down here. And it's because Bitcoin, that's what the thing that distinguishes Bitcoin, or in his eyes, I think, is that it doesn't have these cash flows that to be disrupted. So the narrative can shift there. Then you combine with that the fact that real rates, interest rates are flipping negative at the same time that AI is driving physical scarcity. So by that, I mean more investment, more usage of power, chips, commodities by the AI infrastructure build out is increasing the scarcity of those things. So real rates flipping negative, AI driving physical scarcity. And that's a situation that central banks can't really print their way out of. And then Bitcoin ends up in this sort of macro regime. So yeah, negative real rates plus the Fed on hold or easing, where it has historically delivered its strongest returns. So that's the Goldilocks zone for Bitcoin. Did I get that right? Yeah, go ahead.
He also argues just in general that AI is creating this age of abundance where anything can be copied, whereas Bitcoin kind of has a moat. AI can't recreate Bitcoin. Like, do you really want to be investing in software when most people will be able to create any software they want for free? Do you want to be investing in manufacturing when the robots are going to lower costs? So that is like another angle of his AI Bitcoin thesis.
Yeah. Now, I think there's other things to invest in besides Bitcoin in equities. Like, you don't necessarily have to invest in software. Obviously, there's AI companies, AI infrastructure, power companies. And I think Jordy Visser is bullish on those segments. But I guess the argument is that the correlation between software tech and Bitcoin is going to break here.
Yeah, it's already been breaking for, a couple of months now?
Okay.
If you look at the iShares, or is it iShares or ProShares? I can't remember. But the big software ETF is broken away from Bitcoin.
Okay. So those are all things in the camp of this time is different. We probably have already bottomed. We're not going down to 50K and smooth sailing ahead, I guess.
Yeah, I mean, I think all that stuff is a little bit hand wavy, and just I think from a like a long-term investment framework, it does kind of make more sense to look at just time and the historical data that we have in cycles. Like in past bear markets, it's taken Bitcoin a little over a year to go from its top to bottom. And so far, we're only 6 months into this. And we're also hitting a somewhat obvious, I think, resistance level somewhere between 80 and 90. And I still think like the logical conservative stance is to view this as a bear market relief rally that eventually fizzles out. I'm not saying new lows, but I think we probably go back to 60K and double bottom at least. And I also, I don't know, I feel a little bit weird bidding BTC when stocks are this parabolic. Like I would prefer if stocks were down and the VIX was a little higher and there was some panic or crisis. And we kind of already have the recipe for a future panic or crisis if things start getting spicy again in the Middle East and there's more stress in oil. But yeah, like you said before, like while we're here looking at squiggly lines on a chart and pretending to be smart, like Michael Saylor's buying up coins like a madman, Metaplanet's bidding, the smaller DATs that no one even pays attention to, like Strive and what's the American Bitcoin Corp? They're all buying. Tom Lee is buying ETH to the point where he looks like he's mentally ill. Morgan Stanley launched his Bitcoin ETF. That was apparently the best launch ever, according to its head of digital assets, Amy Oldenburg. ETF lows have been positive for 4 weeks. BlackRock clients bought almost $1 billion last week. So I don't know. Like sometimes I wonder if these people know something I don't. And I read an interesting stat this morning because Tom Lee, our favorite mentally ill bull, posted it. And apparently, every time Bitcoin has recovered 30% from a cycle low, it has never revisited that low. And so that 30% target right now is at 79K. So we're basically right on the doorstep of fulfilling that stat. I mean, we don't have a big sample size. Obviously, it's a nascent young asset, but I thought that was interesting that that 30% confirmation is right here.
Yeah. Okay. I like that. All right. Let's visit a couple of points on the why more pain is coming thesis. I think most notably is the liquidity picture. So Michael Howell, Capital Wars on Substack, I think he makes quite a compelling case regarding the liquidity cycle. So to sum it up, he says that global liquidity, now the way he measures it is pretty complex, proprietary, I think. It's not the simple, M2 or whatever, but it's a more in-depth analysis of what global liquidity is. He says it's peaked, and it peaked in Q3 of 2025, which, by the way, coincides with pretty much the top on Bitcoin. More importantly, for our purposes today, he's saying the downswing is just beginning and will likely last through 2027, and that as liquidity is drained from the market, every risk asset is exposed. And he says, quote, Bitcoin is the most liquidity sensitive asset on the planet. If liquidity goes down, you'll see it first in Bitcoin. And we have seen it first, I think, in Bitcoin.
Yeah, and
how familiar are you with? You go ahead, Alex.
Just to note, he predicted this well before Q3 2025. I think he was talking about this in 2024, maybe even before. But I remember in 2024, Michael Howell saying on a podcast that risk assets like crypto would likely peak with the liquidity cycle in late 2025. So it's not like he's just saying this after the fact. He's actually been right and appears to still be right. Yeah, yes. A lot credit where credit is due.
Absolutely. I remember listening to a podcast with him in late September. I think it was on the way to Token 2049 Singapore. And he laid out this argument. He said it's peaked. And I was like, nah, if only I had listened.
Yeah, you got to listen when people with a beautiful British accent like that speak. It makes it so much more legit.
No, yes, he does sound quite dapper. It is worth noting, I think, that Howell is constructive on Bitcoin long term. So he talks about a debt wall. Roughly $40 trillion of global debt will roll over between now and the end of 2027. And he thinks that debt wall will trigger the next crisis. Inevitably, a crisis is coming, and it's probably going to be triggered by something around that debt wall. And when that happens, central bankers will have no choice but to respond with massive liquidity injections, the only form of ammunition that they know. And in that world, he says, quote, you want an asset that is likely to hedge monetary inflation. That's gold and Bitcoin. So long term, he is constructive on Bitcoin. And I guess one other checkbox on the FUD side is the quantum thing, which needs to be resolved here. You do hear anecdotally that asset allocators, the big boys with the big bucks, are worried about Bitcoin's vulnerability to quantum.
Yeah, but it appears that the developer community has reacted to it quite nicely. And I personally lean towards Nick Carter's theory that the developers don't need to do anything. They can just wait for Satoshi's coins to be recovered. And we can do that because we know with almost, let's say, 95% certainty that whoever recovers it is going to be a large US tech firm like Google or IBM. And they're going to have like a national responsibility of not crashing the price of Bitcoin and committing crimes. So they're going to become a neutral court-ordered custodian of the coins, and they get siphoned into a strategic Bitcoin reserve from the government. I still think that's it's not cypherpunk, and it does kind of violate some old tenets of Bitcoin and absolute digital property rights, but I still think that's the most likely scenario.
Yeah, I'm becoming more and more convinced that the the quantum situation will be handled, and no matter what happens, Bitcoin will get through it. EVM chains, on the other hand, I'm starting to have more questions about. There are many, I'm told, many attack vectors in the labyrinthian panoply of smart contracts, and who knows what's out there. Things could get broken there in more chaotic ways, perhaps.
Even if they are quantum resistant, these EVMs or the other L1s, they have their own problems to deal with that are arguably a lot worse than the quantum threat. And we've been seeing
the classical computing and the Claude mythos and just like hacks.
All the hacks and the security flaws and the fact that it's just such an unattractive place to be right now. Like, let alone being an institution, even the average person doesn't want to touch any of this crap because there's so much risk.
That's a perfect transition, Alex.
Yeah,
I think that's a perfect transition to our to the next segment here on this week's Token Narratives episode. Sorry to cut you off. Was there anything you wanted to finish out there before I move on?
No,
to
I planned that
RaveDAO?
Transition. Yeah, get into RaveDAO.
Thank you. RaveDAO rises to $6 billion market cap, $28 billion FTV. Amid alleged insider manipulation. That's the headline. So RaveDAO came out of nowhere. It's a crypto project focused on building an ecosystem around live entertainment and events. And in a couple of weeks, 2.5 weeks, it hit that absurd market cap, making it the 26th largest crypto asset by market cap at the time. And it seemed suspicious. So the man himself, Zach XBT, the on-chain sleuth, raised the alarm, posted a call to action for Binance, BitGet, and Gate.io to investigate Rave market manipulation and offered a bounty. Then Rave collapsed 95%. CEOs from several exchanges addressed the suspicious activity, including Richard Tang of Binance, Kevin Lee of Gate, Gracie Chen from BitGet. Quote here from Zach XBT, a simple litmus test, $6 billion in market cap was wiped out on just $52 million of 24-hour liquidations. That ratio points to a manipulated and unsustainable valuation. So what happened? I just read the headlines. Do you have anything else to add here?
Okay, sorry. Just to give you an idea of how big this was, RaveDAO's FTV was bigger than Dogecoin, almost as big as Tron, way bigger than things like Hyperliquid or Cardano. I mean, they really pumped this thing to a comedically high valuation before pulling the big exit. And if you look at the token distribution schedule, it's fairly standard. It's a fairly standard distribution between the team, community, ecosystem, other entities. But then the investigations from Zach XBT, the Ledge, and others found out that, well, I shouldn't say they found out. They allegedly discovered that up to 98% of the token supply was controlled by the same insiders. And it appears that they allegedly manipulated price higher by restricting the supply, waiting for hypey headlines about exchange listings, and then sending large amounts of the token to BitGet to create the illusion that there was about to be sell pressure, which tricked people into shorting it. And then that created a short squeeze when those tokens weren't initially sold. And as you mentioned before, it wasn't until Zach XBT started alerting Binance and BitGet on X, telling them to investigate what was going on, that there was this obviously coordinated sell-off by all the insider wallets. And like this project is like a stereotype of vaporware. Like they basically organize after parties for concerts and conferences, and somehow that needs a token. I actually read the RaveDAO white paper just because I was curious, and honestly, when I finished, I had to start drinking. Like I had no other choice because it's like really sobering, no pun intended, that grifts of this scale are still happening. Like this thing is very overt about being a shameless money grab. The white paper is clearly written in ChatGPT, potentially the free version. It's got the big M dashes. It's not this, it's that style of writing. And it's got these like BS partnerships with DJs and these like borderline mentally disabled rappers because, obviously those people always make blockchain tech look more legit. And they've got these philanthropy initiatives where they claim that they're helping little kids in Nepal get eye surgery or some crap. And it's just this classic thing where they pick a random industry, in this case, it's live events, and then claim that it's too centralized and it would be better if it was on-chain. And all they have to do to make that vision come alive is to fleece you with a useless governance token, because that's a lot easier than creating a profitable business and, getting investments from serious investors. And, at this point, I'm not even mad. I'm just impressed. Like I'm surprised that the big exchanges actually went along with all this and allowed it to reach a $28 billion FTV. That's crazy.
Yeah, a lot of very interesting details there. Thank you, Alex. It's a tale as old as time, but these guys sort of ran the playbook masterfully, and also, the big boys at the centralized exchanges didn't seem to actually exactly do their due diligence on this. I guess there's something about the way the incentives align there.
Yeah. I mean, to their credit, they have admitted that it was suspicious, and yeah, hopefully they make a statement. RaveDAO is basically denied that they have anything to do with it. They posted some like copy paste PR thing on X about how they have nothing to do with the price volatility, and just a warning to our users to not use leverage in times of such extreme volatility. But of course, this is after it's already collapsed 90%.
Yeah. Well,
so I went from.
Let's hope this is the last big one like this, and then we finally get some, I don't know, Clarity Act thing where there's a way to make a token basically equity, and then it makes sense. I don't know. Hopefully this is the last big one like this.
Yeah, because these people are it's basically a way to go public without actually having to go public. Like, you don't need revenue or a business model or product market fit. They're just coming up with ChatGPT marketing, hopium, and a token. The idea that
cashing in and people get wrecked. So that's why the rules are there.
Yeah. So on the plus side, maybe it looks like if crime tokens are making a comeback, then it might suggest risk appetite is coming back, and we might see risk flow into digital assets and maybe out of Bitcoin and into some of the altcoins. It does kind of feel like 2021 vibes if stuff like this are happening. And they're like not even a big story.
Yeah. All right. I think, we could talk about Kelp DAO again a little bit more. We covered it on Monday on the weekly. I don't think we have anything to high value to add here. So unless you want to dive into it a bit more, Alex, I'd say we skip it.
Yeah, we can skip it. I mean, there's nothing new. We all know the deal.
It's depressing.
Yeah. It's depressing.
I think, as I mentioned, I took all any stables that I had that were sitting in smart contracts, and then they're back in pure USDT, USDC DAI form, I guess. And now I'm looking at other options.
Yeah, no, I would never recommend any friend or family to do anything in DeFi now. Like, I used to be really excited about it a few years ago. Now it's like, you know what, just hold some stuff on Coinbase. Don't ever create a wallet. Don't ever self-custody. Sorry, but that's just like how it looks right now.
Well, you should self-custody your Bitcoin on moral grounds.
Yes, and be very careful and spend a lot of time making sure you know what you're doing.
Yeah, that's right.
Yeah, it kind of looks like DeFi might go the route of the privacy coin sector, where on average, the people that are using it are only using it because they absolutely have to, because they're like politically exposed, or they're in a country with a really unstable financial system, or maybe they're a criminal, or they're just like really experienced with it. It's not easy managing seed phrases and understanding the whole Rube Goldberg machine of the ecosystem. And now these North Koreans are really making it more difficult.
Yeah. And you get, 3 to 5% interest, and you can lose it all.
Yeah, not worth it.
Yeah. All right. On that depressing note, let's end this episode of Token Narratives. There's going to be new narratives coming out. I promise. I know it. I don't promise it. I just know it. Something's going to come out of the ether here, and in a couple of weeks, we're all going to be talking about something revolutionary.
Sounds like a promise to me.
All right, Alex. Have a great week. Thanks, everyone, for listening.
See you later.
Bye.